Welcome back to the Community Corner podcast, where we explore companies in the S500 through the lens of behavioral finance. I'm Arnav.
And I'm Nikhil. Today, we're focusing on UDR Inc., a leading multifamily real estate investment trust REIT that owns, operates, and develops high-quality apartment communities across the United States. UDR is known for its commitment to providing a superior living experience and maximizing long-term value for its shareholders. We'll explore how behavioral finance influences their strategic decisions, DEI efforts, adaptation to market changes, and how they compare to other companies in the real estate sector. Let's dive in.
UDR has built a strong portfolio in the multifamily housing market, but from a behavioral finance perspective, how do biases like loss aversion and the status quo bias influence their decision-making, particularly in property management and investment strategies?
Loss aversion plays a significant role in UDR decision-making, especially in property management and investment strategies. This bias might lead the company to prioritize strategies that minimize potential financial losses, such as maintaining a focus on established, high-demand markets and properties that have historically performed well. While this approach helps protect the company's investments and ensures steady income, it may also limit UDR's ability to explore new markets or invest in innovative property developments that could offer higher returns. Status quo bias is another key factor where UDR might be inclined to maintain their existing property management practices and investment strategies, even when market conditions suggest the need for diversification or innovation. This can lead to a focus on maintaining the status quo rather than embracing new opportunities in the multifamily housing market.
This focus on minimizing risk and maintaining reliable properties has helped UDR build a stable business, appealing to investors who prioritize consistent returns and lower volatility in the real estate sector.
Exactly. UDR's emphasis on stability and risk management has made it a reliable choice for investors seeking steady performance in the multifamily housing market. However, the company must balance this with a willingness to explore new markets and investment opportunities to ensure long-term growth and competitiveness.
Let's discuss diversity, equity, and inclusion at UDR Inc. As a REIT with a diverse portfolio of properties across the country, how does DEI intersect with their business strategy, and what insights can we draw from behavioral finance?
DEI is particularly important for UDR given their role in providing housing solutions to a diverse population across the United States. From a behavioral finance perspective, embracing DEI can enhance decision-making by incorporating a variety of perspectives, which is essential for understanding and meeting the needs of different communities. A diverse workforce can help UDR better understand the unique needs of residents from various backgrounds, leading to more inclusive and effective property management strategies. For investors, the company's commitment to DEI can signal a forward-thinking and socially responsible organization, which is increasingly valued in today's market. Additionally, strong DEI practices can improve employee satisfaction and retention, which are critical for maintaining operational excellence and driving long-term growth.
Investors are increasingly considering DEI as a critical factor, especially in industries like real estate, where understanding and addressing diverse community needs is key to success.
That's right. By embedding DEI into their corporate culture, UDR not only strengthens its ability to serve a broad range of residents but also enhances its reputation as a leader in providing inclusive and high-quality housing solutions. This focus on inclusivity can also help attract top talent, which is essential for driving innovation and maintaining a competitive edge in the industry.
Moving on to market adaptation, UDR operates in a highly competitive and rapidly evolving real estate market. How does the company adapt to changing market conditions and consumer preferences, and how does behavioral finance influence this strategy?
UDR ability to adapt to changing market conditions and consumer preferences is crucial for maintaining its leadership position in the multifamily housing market. From a behavioral finance perspective, the company's strategy involves balancing the need for innovation with the risks associated with changing their property management practices or entering new markets. Loss aversion might make UDR more inclined to focus on their established properties and markets, but they also recognize the importance of staying competitive in a market that is increasingly influenced by urbanization and changing demographic trends. Status quo bias might make the company more focused on maintaining their traditional property management practices, but they must also be flexible in adapting to new trends such as the growing demand for smart home technologies and sustainable living environments.
This adaptability is key for UDR, especially as they face competition from both traditional real estate companies and newer, more tech-driven property management firms. Their ability to innovate while maintaining reliability is essential for their continued success.
Exactly. UDR's success will depend on their ability to balance innovation with the strength of their established properties, ensuring that they remain competitive while also maintaining the stability that their investors and residents value. They must continue to evolve and adapt to meet the challenges and opportunities presented by changing market dynamics and consumer behaviors.
Now, let's compare UDR Inc. to other companies in the real estate sector like Avalon Bay Communities, Equity Residential, and Essex Property Trust. How do UDR behavioral finance dynamics differ? Now, let's compare UDR Inc. to other companies in the real estate sector like Avalon Bay Communities, Equity Residential, and Essex Property Trust. How do UDR behavioral finance dynamics differ?
UDR dynamics are often compared to other leaders in the multifamily rate sector, such as Avalon Bay Communities, Equity Residential, and Essex Property Trust, particularly in their approach to property management, investment strategies, and market adaptation. UDR emphasis on maintaining high-quality properties in established markets appeals to investors looking for consistency and low risk in the real estate sector. Avalon Bay, known for its focus on high-end urban properties, appeals to those interested in growth through premium locations and amenities. Equity Residential, with its strong focus on urban markets and sustainable living, offers a more dynamic approach to property management, while Essex Property Trust's emphasis on West Coast markets positions it as a leader in the rapidly growing tech hubs. UDR focus on balancing reliability with innovation provides a unique value proposition, but it also means they must carefully manage the risks of staying too conservative in a rapidly changing market.
And unlike Avalon Bay or Equity Residential, which have a stronger focus on luxury or urban properties, UDR's strength lies in its ability to maintain a diverse portfolio of reliable, high-quality apartment communities across various markets.
Absolutely. Each of these companies has its own behavioral finance dynamics that influence how investors perceive their value. For Udr, the focus on stability and market adaptation provides a unique value proposition in the multifamily housing market.
To sum up, Udr Inc.'s approach to business is deeply influenced by behavioral finance principles, whether it's through their property management strategies, DEI initiatives, or market adaptation. But like all companies, they must navigate the biases and perceptions that can influence investor behavior. To sum up, Udr Inc.'s approach to business is deeply influenced by behavioral finance principles, whether it's through their property management strategies, DEI initiatives, or market adaptation. But like all companies, they must navigate the biases and perceptions that can influence investor behavior.
That's right. Understanding these dynamics offers a clearer picture of what drives UDR stock price and where the potential risks and rewards lie.
Thanks for joining us on this episode of the Community Corner podcast. Until next time, I'm Arnav.
And I'm Nikhil. Stay curious and keep questioning the narratives.